Hey, if you're a business owner and you're looking to get into the right equipment without breaking the bank, you need to understand these 5 different types of equipment financing options. I'll break them down in a simple way that's clear, simple, and actionable. Let's go. Number 1, EFA, otherwise known as an equipment finance agreement. An EFA is like getting a loan for your equipment. You own it right from the start, you pay it over time with fixed payments. Think of this like buying a car with a car loan. It's yours, but if you don't pay the bank, they're coming to take it. Key point here, own it from day one and pay over time. Number 2 is a capital lease. Capital lease is like renting to own. You lease the equipment, but it's pretty much yours, but at the end, you can buy for, a nominal amount, maybe $1. It's great if you want to keep the equipment long term. Key point here really is lease it now, own it later. Number 3, operating lease. Operating leases are like renting an apartment. Best example I can give. You use the equipment for a set period of time and then you return it, no strings attached. Perfect for stuff that gets outdated fast. Key point here, use it, return it, move on. Number 4 is a fair market value lease. These are like a renting with an option to buy. You lease the equipment and at the end, you can buy it at its market value or just return it. It's flexible, and if you're not sure if you want to keep the equipment, it's a perfect fit for you. Key point here, try before you buy. Number 5 is a sales leaseback. Sales leaseback is like selling your car to the bank and then leasing it back so you can still drive it. You get the cash now and you keep using your equipment. Key point here, get the cash now, keep using your stuff. If you're interested in learning more about business funding and the different options for small businesses, make sure to subscribe below.